Hey guys, it's Kevin Davis from Detailer's Helper checking in with you today. It's about tax time. Today is about mid-March, and so April 15th is coming up soon enough. I actually have yet to get all my stuff to my accountant, so I better get ready for that, do that stuff here very soon. If you have not done yours, probably time to get yours done as well. But I wanted to talk to you today about some little known or forgotten stuff that you can do to lower your tax liability as a small business owner. One of the best things about being a small business owner, being incorporated, LLC, whatever, is that you get to write off quite a few things. So while there's a huge list of things, one of my buddies, Ryan, on one of the groups had reminded people not to forget about mileage deductions. So did a little research. I thought it'd be a good thing to sort of remind you, do a quick video today just to put this in your brain for 2014 so you can go back to the beginning of the year, go back and do some tracking, do some figuring, and get your mileage taken care of. For 2015, the IRS deduction was 56 cents a mile here in the U.S., which is quite a bit. I mean, if you do 100 miles a week, then that's going to be 56 bucks a week. So that's pretty good deduction on your overall stuff. So if you're using, that's basically a mileage deduction for any business related travel in your vehicle. There's a couple different ways that you can write off your mileage, write off your expenses from your vehicle. There's at least three that I know of, and one is going to be just to write off the mileage. You basically keep a log, keep a little notebook in your vehicle, write off the mileage that you use, and then multiply that mileage at the end of the year, every month, whatever, by that 56 cents. And I use QuickBooks. QuickBooks makes it really easy. You can actually input individual vehicles, and you can track individual mileage rates and individual mileage on those particular vehicles within QuickBooks, run a report for your accountant at the end of the year, and you've got all that tracked. So the other way to do it is to actually record actual expenses for your vehicle, stuff like gas, oil, tires, any maintenance, that kind of thing. You can write off those individually. As you can imagine, the mileage deduction would be quite a bit easier to do. You can also write off charity mileage. You can write off medical related mileage, so check with your CPA on that. And you want to check with the CPA also about what mileage might be deductible, what mileage might not be deductible. Some may say that driving to and from your shop could be. I would tend to believe that probably is, but you'd want to check with them to make sure. And then also you can do some different things, which would be actually doing this thing called Section 179. A couple of years ago, they called this the Hummer tax, which is anything over about 6,000 pounds can be written off as usable equipment and can be depreciated that way. And back in the day, it's been a few years, you could actually write off somewhere like $25,000 to $27,000 worth of equipment per vehicle on this. They've sort of gotten a hold of that, and I think the last thing that I checked was somewhere around $11,500 for most vehicles per year to depreciate. So it's not quite as big a hit on your tax liability as what you'd want. But that's Section 179. You can actually go to section179.org. There's a whole explanation that shows what you can and can't write off. Vehicle requirements. I think it's about 6,000 pounds. So if you drive a big SUV, if you drive vans, cargo vans, panel vans, that kind of thing, check that out and sort of see whether or not that works for you. So anyway, that's the mileage deduction thing. Being able to write off your vehicles is a pretty big deduction, can add up quite quickly against your tax liability, so don't forget that. I wanted to give a bit of information on that to show you how to do that. But of course, I am not a CPA. I'm not an attorney, so here's your disclaimer. Do not take anything I say with any legal recourse, any legal bearing. You want to check with your CPA and or the IRS.gov website to make sure that anything you do is within the letter of the law. And of course, double check with your CPA and see what they want you to do. So anyway, there's the vehicle mileage / write-off for your vehicles. I hope that helps. I'm Kevin Davis, doing what I do so you can do what you do better.